taking a look at market activity for the week that's been so far, the market has seen some easing over the week, but pullbacks have been very shallow and uneven. Yesterday's indication or rise, an indication of that. What are you making of the movement we're seeing on the markets at the moment?
A while back, I did say that this quarter is going to be very interesting for many corporates that are listed at the stock market, especially in terms of coming up with new products, new services, and basically the way forward. And I think as the key fundamental aspects of every company that's listed on the market actually changes, we're going to see now the true price correction of the market. We're able to see in terms of liquidity, in terms of our price movements, in terms of investor interest in particular counters like Safaricom, Kenya Commercial Bank, and Equity. And clearly we can see that Safaricom and Equity are leading the pack in terms of actually changing the entire scene of how to do business or how to come up with new products and services. So it's an interesting time at the market, and it's a bit confusing for investors if you don't have the relevant information and if you don't get the information on time.
Well, we've really been putting a lot of focus on the broader economy, where driving growth has been on the Central Bank of Kenya's agenda. We've taken a look at the role banks are starting to play in this environment in particular, and with that, falling interest rates have been in the spotlight. Now, this is expected to trigger somewhat of an adjustment in investment portfolios, that it could trigger a shift towards the stock market away from fixed income securities. What movement are you anticipating as a result of that one driving force in particular?
I believe with the interest of the World Bank into how things actually been playing, and central banks' interest to ensure that the market is actually being run properly. The issue has been for the last 2-3 quarters, been seeing a lot of interest in the fixed income department, and as it's been going, many analysts are actually saying, and I concur, that at the end of the day, there's only much you can do as far as the fixed aspect is concerned. And the concern is going to be now back to equities, especially where the economy, in terms of the government borrowing from the local domestic market is actually concerned, and where they're able to borrow more money, especially with companies' fundamentals actually improving, and seeing that many companies are turning into the positive margins. For example, KQ just releasing its results a few moments ago. So it's an interesting time for economy, and with the projections of World Bank that the economy is actually going to grow by at least a margin of 4% this year, we're looking at good times ahead for Kenya. But it's also upon the Central Bank of Kenya to ensure that the Ministry of Finance actually implements the stimulus package that is needed for various sectors of the economy. We're looking at the agriculture sector, we're looking at the finance sector, we're looking at the telecommunications industry, which is actually key in terms of the driving force behind a lot of our products and services that many of these companies need to reduce costs and increase revenue.
Let's hone in on KQ's numbers. I mean, clearly the market was anticipating positive numbers out of this company, given what we've seen in terms of share price movement on KQ for the week that's been so far. What are the overall reaction to, what has overall reaction to those numbers been so far?
I believe for investors who have got KQ shares are relieved to see that after two years of making losses, the company is actually back in the positive in terms of making profits, because I think what they've been able to do in the last 1 year in terms of the marketing strategy, changing their strategy on how they're looking at the business overall in Africa, increasing local trade routes, and clearly taking advantage of the World Cup. I think what the company has done is really impressive, and I believe they have a good way going forward. Especially they did release news 2 days ago saying that they're going to buy lease 4 jets for local routes, which will definitely mean that they're targeting more at local tourism, and especially in African markets, especially for the World Cup. So what the results are impressive. Clearly tells that the losses they made, especially hedging against the fuel a year ago, has actually been recovered, and I think they've learned a bitter lesson from it. But unfortunately, there's a dark cloud that hangs over them, especially the report for the crash that happened a while back. So how they handle it, especially the lawsuits, will also determine how the company goes forward.
But overall, I mean, looking at reports that were released this morning, a lot of emphasis has been placed on the fact that we've seen this turnaround as a result of the forex market and some of the movement we've seen on the currency side of things, and also the fact that oil prices have edged lower. Overall, are we looking at a company that will manage a sustained, a sustained presence in positive territory moving forward in your books?
Yes, as as an investor, I'm looking at KQ as a company going forward with increasing profits, especially in the next coming quarter. We're looking at a company that if it continues its current strategy, they'll maximize on local routes, which will actually bring in more revenue. But I don't think the profits and the improved fortunes are because of how the dollar has been, or the exchange rate, or how fuel, the reduced cost in fuel has been. But I think because of how it's been able to re-strategize on its business focus at the end of the day, bringing in more customers, which will actually mean improving its bottom line at the end of the day. So the aspects of forex exchange and fuel at the end of the day have little or no significant at all on it compared to how it's been doing its bottom line business strategy.